the NGS dropped 1.23% this week after a massive 55% rally. But while we're at that, Access Bank is battling a serious CBN BOFIA crisis and possible dividend suspension. First Bank just dropped a monster 321 billion naira profit. That is massive, about 72% up. Wherever you're watching, whether you are watching from Lagos, you are watching from London, New York, Abuja, wherever you are across the globe, today we're going to be breaking down Access Bank and First Bank showdown, the BOFIA crackdown by the central bank, and we'll be letting you know which other banks you need to watch as pertaining these BOFIA acts. We'll talk about the oil windfall, and we'll also talk about what all of these mean for your portfolio. So if you stick with us, we'll be diving into these issues. We'll also be providing investor guide and tactical advice towards the end of the video. So welcome everyone. This is The Edge, and we are glad to have you here today. If you're new to this channel, please like this video, hit the notification bell, and subscribe to this video. We are here every weekend providing context for investors who invested in Nigerian financial market and the global financial market as a whole. So welcome, and it's our pleasure having you. And joining me today to unpack all of this is Dipo Ajayi. Dipo Ajayi is head fixed income and vice president at Chapel Hill Durham. Dipo, welcome to The Edge.
Yeah, good day, Dr. Carval. Thank you once again for having me today.
Always a pleasure having you, Deepo. So you probably heard from the intro there. We saw the all share index take a plunge about 1.23%, wiping out trillions of naira after hitting fresh highs recently. So the market cap shed several trillions of naira in one day. So what would come to mind naturally would be, was this a healthy profit taking after the April's monster rally that saw about 20% upside in April? Or is it a start of something bigger?
Well, I think it's just purely profit taking. There's nothing extraordinary that actually happened in the market. Markets is known to actually have the uptime. You have a time where investors come to the market to actually take profit from their holdings. And what we noticed last week wasn't something totally out of place. It was just so normal. And if you notice clearly, you will see that it wasn't broad based. It was in specific names, and also beyond the profit taking, there is still also aggressive interest in some big names. As of Friday, Dangote Cement still actually gained 10% on Friday. I gives you an idea of the fact that beyond profit taking, there's still also interest in other aspects of the market. Or could it even be that some investors are purely rotating from a particular instrument to another, knowing fully well that they've made a sizable income in some and also looking to actually reposition in another. So what happened last week wasn't anything that calls for huge concern.
Okay, that's great, because I was watching that, and I was beginning to think if we market is beginning to take a plunge for a lot of people taking profit and rotating into different names, as you said. So it wasn't really clear, but thanks for that clarification. So the market has seen an insane run. We up about 55% year to date, which is one of the best performing frontier markets globally. So that's selling pressure that we witnessed, especially in some of the big caps that you mentioned. And we also saw gains, the likes of Dangote, as you mentioned. So was the sell-off, again, just to find more context? Was it Is it like a one-off thing that you think investors should just jettison, shouldn't be worried about at all. Just to get that clarification.
I think what the market is trying to do is to share the bit of weight, and what will happen is that it presents opportunity for those that actually missed the initial entry. You see names like MTN. MTN actually traded down to around 800, early 800 levels, circa 800. And what it means to the market is that, and you can remember vividly the level of monster profit that MTN actually posted in Q1, and
Q1.
we also are still expecting the same level of performance in Q2. What that will simply means that MTN may likely be declaring dividend. So names like that actually present another level of interest for investors that actually missed the initial rally. So for me, like I mentioned, when you see market like this, what I see in the market is that is an opportunity for you to actually look at markets, check valuations again, and be sure that the market is actually representing another level of opportunity for you. And so you can also can cash in on such opportunity. We saw Arade traded as high as 2,100. Currently, he actually traded down to 1,880. And one of
Yeah.
the reasons why I also further mentioned that it's not broad based, while Arade was actually shedding weight, Seplat is still very firm at north of 11,000. So it tells you that it's not as a result of industrial crisis or investor trying to shed weight across board. It gives you an idea that what's simply happening is that a lot of people have looked into some of this name early enough. At the beginning of this year, Seplat traded, RZ traded as low as 670 levels. So imagine an investor that has locked in at 670 level and seeing 2,000 naira valuation as at last week. Of course, it presents opportunity for such investor to actually want to take some of the profits. And what we are currently seeing is not even investors selling the whole of their portfolio. Most of them are just reducing their exposure into that name so as to actually rotate into another name in the market. So for me, I don't think it's anything that calls for concern. Rather, I feel that's an opportunity for people that actually miss initial rally to actually lock in.
Okay. I still have to, press you further on this. Are we seeing, because this is the metric or the movements that I normally check when I begin to see this amount of drop in the NGX. Are we still seeing foreign investors participating, or are we beginning
Yeah,
to see them pull back?
foreign investors are still very much in the market. Dr. Okafor, don't forget that September is close by. And we all know that by September, Nigeria will fully be re-enlisted on the FTSE Frontier Market Index.
Yes.
And you know what this means to people that are actually mimicking this index. It means that we tend to start seeing interest in Nigerian market. And there are fresh investors that will come into the market on the back of that. So it's we are not seeing investor rushing out of the market. And at the same time, if we are seeing investor rushing out of the market, another way for us to actually test that analogy is to look at what is happening in the high and in window. We are not seeing any pressure in that segment of the market, which also confirm that even if foreign investors are actually selling, it purely means that they are selling to rotate into another name rather than selling to actually extra
Exit the
take their
market.
money. Yeah, exit the market and take their money back home. So, like I mentioned, I feel that is an opportunity for people that actually missed the initial opportunity. Like I said, Septa traded 670, sorry, Arab traded 670 earlier in the year. It's trading 1,880 naira now. Where do you think Aradel will trade by the end of the year? And
Hmm.
Seplat has released results. We have an idea of what Seplat released. Our market is still waiting for Aradel to actually release their results. For me, I think Aradel in the same vein will actually post very attractive return. You look at Seplat paid they paid the dividend of 5 cents and also a special dividend of 4 cents. And I think the 4 cents is from the windfall. So I won't be surprised if Aradel is also mimicking the same stance, where they're actually paying attractive dividend to the investor just to actually and make them also enjoy part of the windfall that the business has enjoyed this year.
Okay, interesting. We'll continue to keep a tab on what's going on the edges. Let's talk about some specific names now. First Bank, that's FirstHoldCo, released its Q1 2026 results this outgoing week, posting profit before tax about 321 billion naira. And that's a massive 72% jump year on year. Okay, everyone knows what has been going on with First Bank. We've covered that here. We've seen how they took that significant reorganization, how they took about 748 billion in impairment charges last year. So their gross earnings also came up very strong, about 26.8% to 400 and to about 942 billion naira. So this puts, to my mind, this puts FirstHoldCo ahead of several tier one peers in the terms of the profit raise for Q1. So what would you say drove this impressive turnaround, and how much of it is from like a core banking perspective versus like one-off activity?
When you look at FirstHoldCo this week, it actually performed good, majorly towards the end of the week, and that was after the result was released. FirstHoldCo actually released two results this week. They released their full year audited and also their Q1 results. What's very impressive about the result that they actually released is, firstly, for me, is the full year result that was released. FirstHoldCo posted about 139 billion PAT in their full year results, and that was in contradiction to the initial about 50 billion that they actually released in their unaudited result that was released earlier in the year. So what FirstHoldCo what it did was to give us the worst case scenario at the beginning of the year. And don't
Okay.
forget that I think on issue we discussed how market actually punished FirstHoldCo for that reaction. And I remember vividly we also mentioned here that it's also another opportunity for investor to actually lock into FirstHoldCo, considering that market has over punished this name. And our view is premised on the fact that when a bank is shedding some of this load, it gives them capacity to fly lighter and fly better. And we have seen the FirstHoldCo actually reinforce this our view with that impressive performance. When they now released their full year result at 139 billion, it actually beat the imagination of investor because
Yeah.
the view was already around 50 billion PAT. So it means that they did far better than what they even anticipated at the beginning of the year. And to now have icing on the cake, FirstHoldCo released their Q1 results, posting about 267 billion profit after tax, and that's a big one. It shows that net interest margin went up to 10.1%. Compared to the 7.7% that we saw Q1 last year. And also beyond improvements in net interest margin, we also noticed that the cost to income actually dropped to 45.2 from the 52.3 that we noticed last year. What this means is that, like I said, it means that they are now flying lighter. And it simply means that when you are flying lighter, you can now minimize or reduce your cost. And FirstHoldCo demonstrated this one in their Q1 results for the year. And also, when you look at their EPS now stands at 6 naira. And that gives you an idea of how big or how strong the bank is now. And to now cap it up is that their price to book ratio is now 0.79. And when you now compare FirstHoldCo with other big names in the industry, I mean the tier one names like
The
GT Bank, like
GT and
Zenith,
Zenith, yeah.
most of these names currently are already trading above one times level of that for their PBT price to book. And so it simply means that in relation to some of these names, FirstHoldCo looks very, very cheap when you compare to names like Zenith, when you compare it to names like GT. And when you look at their impressive result, it simply means that since it's more like from interest income and from the core aspect of the business, there's nothing more from
Like one
exchange
of
rate gain. You
yes.
understand? That would have said maybe it's more like one off. So it simply means that what we have seen is more like core income from the core aspect of the business. And it simply means that FirstHoldCo has started enjoying the dividend of their capital raise. It simply means that they are already sweating their new capital. And on the back of that, we've seen improvements in their revenue generating capacity and also the capacity to actually declare very good bottom line for the bank. So for me, I think that they've set themselves out there for market to actually see, and that's why market actually rewarded them on Friday with a 10% gain. And I think FirstHoldCo now look like the new ETI now in the market. And I won't be surprised if FirstHoldCo continue this rally until when he actually get to like 18 levels.
That's a big one. Um, so obviously this looks to me like some major recovery, but I want to get your take on this because um, they took that huge impairment charges that crushed the full year profit. So this Q1 to me looks like a major recovery under the new leadership direction. But the question would be, is this sustainable? This
Well,
profit, is this sustainable going into the rest of the year?
Well, considering that this is from the core part aspect of the business, he also reinforced the fact that it's something that can be replicated again. It simply means that all they need to do is to continue what they did in Q1 and also to find a way to do it better so as to be able to actually post better return in other quarter of the year. I imagine FirstHoldCo actually continuing this stride. It means that by the end of the year, the bank will post over a trillion profit after
After
tax,
tax.
and you can imagine what that means to the bank. You can imagine what that means to the banking sector, and you can have an idea of what that will mean to the market. So I feel that is something that they can actually replicate it, considering that when you look at the composition of the return return, there's nothing that sounds like a one-off activity there. So it simply means that it's something that can reoccur and it's something that can be replicated.
So how would you compare or how would you, you know, position First Bank right now with its peers like Jenny, GT? We're going to talk about Access shortly, UBA, and how does it mean? What does it mean for an investor considering First Bank now, with even after this week's volatility that we saw?
What it means for investor is that it actually presents a buying opportunity for investors. Like I actually mentioned earlier, you can now start comparing this bank with other peers in the market.
Yeah.
They've done their housekeeping. Their house is more tidied, and it also means that they have a good headroom to actually play with. And when, like I mentioned earlier on, if you now start looking at where GT is trading, GT is trading almost like 1.4 price to book. Zenith is like about 1.2 price to book. And when you now compare it to a bank that is just 0.79 price to book, it simply means that it's way cheaper when you compare it with the peer. And it also means that for me as an investor, beyond the activity that we see on GTE and Zenith Bank, I won't mind actually looking into names like First Bank, considering one, the fact that they are better now. Two, considering the fact that the current management is actually very aggressive in actually ensuring that they are in line and also they are hard there to actually impress their shareholders. And so it simply means that First Bank may be coming back to the market with interim dividend in Q1. Sorry, in half year. And when they are coming to the market with selling dividend, it gives you an idea of the level of dividend yield that will mean to the market, considering the kind of income that the bank has posted. So for me, I think First Bank is still cheap when you compare with other names in the banking sector.
Okay.
And even when you see compare First Bank with Wema Bank, First Bank is still well cheaper than Wema Bank. Considering that Wema Bank is already trading price to book above one, and First Bank is still sub one, so it still means that First Bank still have headroom, it still have
For
upside
growth.
opportunity for investor looking to actually invest.
Okay, interesting. So we'll watch out and see how First Bank continues to trade and whether they are able to replicate this huge profit jump for the rest of the year. Now let's switch gears a bit now and talk about Access Bank. So we all saw that report about the BOFIA Act, and it's one story that has dominated headlines in the past week, which is the Banking and Other Financial Institutions Act, Section 19, subsection 8 and C. The bank, which is Access Bank, has been alleged to have breached that section of the regulation. So they've been told to cut their foreign subsidiary stakes because they exceeded the 10% shareholders fund limit. So for someone that is obviously new, doesn't understand all that is playing out, can you just walk us through what exactly happened and why the central bank is trying to crack down on this?
Well, thank you, Dr. Krafor. I'm sure some weeks ago we spoke about this on this show where UBA actually posted their full year result without declaring dividend.
Mm-hmm.
And markets actually on the back of that punished UBA. Market did
And
not only
punish
punish
assets.
the market punished Access, and market also punished Fidelity Bank. And I think the punishment was all, just based on the fact that if your financials is still sitting with the regulator by now, it simply means that there's one hiccup or the other.
Yeah.
And at that particular point in time, Access Bank traded down from 33 naira to 26 naira. And last week we were here on this show talking about where will Access Bank open or trade on Monday. And
Mm-hmm.
our view was the fact that it could trade as low as 23 levels. And
Yes.
I also mentioned that Access Bank has been punished, and we may not likely see further punishment because so that will not be double jeopardy on the back of the fact that you are getting punished twice for the same offense. And but during the week, market started good. We were trading around 26 levels until Access Bank came back to the market to actually explain the reasons why they may not be paying dividend. And I think the further punishment that Access Bank received wasn't because they are not paying dividend. It was because that how would you breach such a regulatory requirement without actually knowing? And if you breach such regulatory requirements, if the report has been like maybe 12%, 11% breach, of course, maybe market could have seen that, okay, it could have been other, maybe valuation, improved valuation, and as a result of that, maybe that was wrong. But a whopping 19.4%
I think
gives
that
you an
is
idea.
actually, sorry, Deepa, I think that is actually concerning though. Before we really even get to the meat of the matter, that's actually concerning that you can be in that violation with such gap and alarm bells aren't ringing in their head office.
Like I said, that's exactly why the market actually punished them. That how did you miss that? And how do you? Because it's like you just came out of one, and while you are just coming out of one, you found yourself in another. And for me, I think the management dropped the ball in that regard. And investors were punished for that, and as a result of that, market also punished that name. And the requirement is that you are supposed to maintain 10% of your foreign banking subsidiaries. It means that it must not be more than 10% of shareholders' funds. And what we noticed on the part of assets was that it was about 19.4%. And on the back of that, the regulator mentioned that Access Bank needs to regularize this before they can actually resume dividend payment. And I think the concern for the market and why the beating was more was the fact that the management also re-emphasized that it will be a surprise to them if at the end of H1 they were able to actually pay interim. So it means that on their part as well, they also will be surprised that they are paying interim dividends in at the end of half year. So
Yeah.
it simply means that investors that are actually looking for dividend income deem it fair that Access Bank is not a destination for them. And a lot of them quickly jump out of the market, rotating into instruments. And they may likely be paying interim
Dividend.
dividends. And that's exactly what actually happened to the bank. And that we noticed that the bank traded as low as 23 levels. And before the close of the week, we saw a retracement back to 24 levels. And for me, I still feel that there's still opportunity in the name.
Okay, so Access has already signaled that they may skip even half year 2026 interim dividend until they fix this issue with the BOFIA section that is in breach. So for investors holding Access Bank or the banking sector broadly, how big a deal is this, and what's the timeline to resolve this with? I mean, for Access Bank, is there a timeline that they need to resolve this?
Yeah, for me, when you look at Access Bank, um, what happened to them is actually a big one for investors. And like I mentioned, the motive for holding this name uh, will determine how you actually attend to such events. There are investors that quickly jumped out of the name, and there are investors that also still think that this drop is an opportunity to actually accumulate more position in that name. And the Apex Bank gave the bank 12 months to actually resolve this issue. And on their call, they mentioned that they will not be paying in interim,
Yeah.
but they never mentioned that the full year payment will not be possible. So I think that this affects investors greatly. Some investors already maybe make um, provisions for dividends already in their book, thinking that, oh, if Access Bank can pay 3 naira, this what will be the impact on their position. But now that the bank is not paying any dividends, simply means that they need to recalibrate their model, and that may also mean negative to them. So I think that people are actually disappointed. Market was disappointed. I'm sure management of their part too, they are actually disappointed because you can't go a full year with that stellar performance and not reward investors. But the good part of it is that these funds will sit in their book and help them to actually resolve some of the crises that they are currently having. It also means that the bank can now use the opportunity to actually recalibrate their whole consolidation motive. They can now look at what do we need to do. Should we shed weight, or do we need to increase capacity? And that will, one way or the other, determine how fast they can actually get out of this crisis.
Okay, so Access Bank shareholders fund, just to put more context into this, Access Bank shareholders funds stood at roughly about 4.25 trillion at the end of 2025. with foreign subsidiaries currently at about 19.4% exposure versus the 10% cap, which would limit them ordinarily to about 425 billion, right? So the question would be, how can Access Bank practically comply within that 12-month window? So, if you may, can you walk us through realistic options? Is it partial divestment? Would they have to spin off or other restructuring? And the potential impacts on the group's profitability going forward, especially since foreign operations from the like Access Bank UK contributes heavily to their earnings. So, what metrics should investors begin to track quarterly to see or know whether they are on track to meet that 12 months deadline?
I think there are three things I think the Access Bank can do. One, shed weights. Two, increase capacity. Three, restructure their book.
Yeah, please
So on the
explain. What do you
shedding
mean
weight,
by yes? Go ahead.
it simply means that they may need to diversify from some of their holdings in some of the African countries. Access Bank is currently in like about 12 countries in Africa. They are in Gambia, they are in Ghana, they are in Cameroon, and it gives an idea of what the bank is trying to do. If a country like Africa, a continent like Africa, is looking to actually embark on the after implementation fully very soon, which simply means that Africa will be a country and trade can go in smoothly. And what the management was trying to do, I don't think is totally out of place. And I'll quickly chip in this. I also think that that's part of the BOFIA route. To me, it sounds as if it's outdated. I think that we need to actually ensure that we review some of these laws to be in tandem with time. In a time where banks are recapitalized, in a time where banks are bigger, in a time like this, you expect banks to actually take advantage of opportunity across Africa. Don't forget that we are now in a global world
Yeah,
where there is no more barriers, there's no more walls. Uh, Access Bank presence in UK, if you look at Access Bank UK, Access Bank UK can actually serve as a tier one bank in Nigeria. So it tells you how big that bank is. So it simply means that what they were trying to do was to replicate what they did in UK in other parts of Africa. So now actually constraining them to like a 10% of shareholders fund, I think that is very conservative on the part of the regulator. I think it's something that the regulator needs to revisit. Maybe they need to actually improve that maybe between 15 to 20 so as to actually give some of these banks the opportunity to actually take advantage or to actually take advantage of opportunity beyond the Africa, Nigeria market. So the number two for me is improved capacity. And what I mean by improved capacity, they may need to raise capital. So I will leave that to them to actually determine how best they want to raise capital. Access Bank is a name that when it comes to the market, they can actually raise capital so easily. But my concern is that if they decide to toe the line of raising ordinary share capital, it simply that will actually lead to
dilution.
dilution of shares. It means that the EPS will be diluted, and that's one way or the other can actually affect investors' holding.
Returns. Yeah.
I think there are other ways to raise capital, and I will leave it that to them to actually look at ways to actually capitalize on that. Could they raise preferred capital and actually use that to actually show up their shareholders fund? I think that they can actually check within the framework of the law of the that is actually guiding the banking sector to see if such opportunity is available and they can actually catch in on such opportunity. What that would do is that will help them show their shareholders funds, and that will actually bring their their holding in their foreign subsidiary within the expected number. And the final one is restructuring, and that simply means that they need to restructure the group structure. Currently, the way it sits and is that Access Bank Nigeria is having orders under them. It means that you have the HoldCo structure under them. You have the Access Bank UK. You have Access Bank Africa, Gambia, and other investment in Africa. You have it under the HoldCo structure. They
Yeah.
can find a way to actually restructure this their structure in a way that I will give them room to actually work within that percentage and still not fall short of the requirement of the Apex Bank. So I think that the Access Bank management team are very, very innovative. We saw what they did when they were trying to improve their capital adequacy. Access Bank came to the market with the Access PEP Eurobond, and that actually counted as part of the shareholders' fund to the bank, and that actually helped them to actually meet the requirements of the central bank within that framework. So I know them to be very innovative, and I know that they already put on their thinking cap already, and they will work on everything they can do to ensure that they bring back, they bring their investment in their African businesses within the expected framework number by the central bank, and ensure that by full year they are able to actually reward their investors.
So, Deepo, what is the Apex Bank actually afraid of? With this regulation, and are there Access Bank subsidiaries, on the continent, outside of the continent, that are not contributing to the bottom line for Access Bank that the Apex Bank is worried about? Because ordinarily, I would see this as some positive, that we encourage our banks to open up um, subsidiaries in different countries, and these countries, they are also contributing significantly to the group's bottom line. So is the Apex Bank worried about some of its subsidiaries? Is the Apex Bank, I mean, I'm just trying to understand what specifically is
Well,
the Apex Bank worried about by including this section in the BOFIA Act?
I think that what the Apex Bank was worried about is that if you remember vividly, the last adjustment to this book here, I think was around 2020.
Okay.
And that was a peculiar time in the history of the world. So it was a time where markets globally was very edgy. It was
Mhm.
a time where there was a lot of volatility. It was a time where um, most Apex Bank had to put on their risk thinking cap on at that particular point in time, so as to protect their financial sector. I think that that could be one of the reasons why that was actually included. And I also think that is a way to ensure that you are not overly exposed to other country, and at the end of the day, that actually now erode your shareholders fund on the back of that. For me, I think it's nothing extraordinary to worry about, and like the current CBN administration, I think they are smart. I think that they know their onions. But my concern is that I also think that they should have spotted that as something that they need to actually review, because if you are punishing a country for actually investing for about 900 billion in other parts of Africa from a shareholders fund of about 4.5 billion. sorry, 4.5 trillion
1.5 trillion. Yes.
trillion, which simply means that they still have about 3.6 trillion that's actually invested within the country. I think that it also still makes sense for you to actually support that because it helps you diversify the risk of the country. Uh, Look at what happened in Nigeria between 2023 and 2025. There was a lot of volatility in the
Hmm.
currency, and one of the things that helped names like ETI was because the major part of their income is not from Nigeria. So it means that they were diversified across Africa, West Africa. And on the back of that, the impact of Naira loss wasn't significant on the consolidated book because of the stability of other currencies like the CFA across the other West African countries. In the same vein, when you now look at like an access bank that has extension in other African countries like Gambia, Cameroon, Ghana, and so it means that they try to actually spread their risk across Africa. And what that means for me is that is a way to actually diversify your holding. So I don't think it's totally a bad thing. But I'm sure the central bank will actually shed more light to that on the reasons why they need to actually toe that line. And my concern is that I now begin to ask myself, is it only Access Bank that falls short of that regulation? Or could it be that the hammer of the regulator is still coming on other big banks in the country?
Yeah, that's a good one. Before I was going to also talk to you about that, but just to round up my thoughts on, the last point you made. If Access Bank's subsidiaries are contributing to the company's bottom line, my understanding is that whatever profit they generate from these subsidiaries will be repatriated to the country and they bring in USD, right? They bring in USD, which is, to support the strength of the local currency. And also, as you mentioned, to diversify their, you know, investments across the continent. Because Nigeria is not the only one that is immune from crisis. You already spotted 2023 to about 2025 when we saw that a lot of volatility. And there were countries on the African continent that were stable, that Access Bank, as well as other banks, have presence in. The UBA, for instance, their subsidiaries generate about 40% of their returns. So if we begin to apply this big hammer, I'm just wondering, what's the intention of that 10% is. But let's talk broadly. Are there other banks that you think investors should be worried about? Because obviously, Access Bank is not operating in isolation. Are there other bigger names with significant stakes in others in maybe countries like Ghana, Kenya, UK? Access Bank has presence in UK or elsewhere that could be close to breaching the BOFIA 10% foreign investment limits? And which names should investors monitor closely in the coming quarters or for similar regulatory
Well,
pressure?
for me, I can't say specifically now, and why is because this other bank they've gone through the central bank,
Mm-hmm.
and the result has been ratified by the central bank, and they were not prevented from paying dividend. When you look at Zenith Bank, Zenith Bank has a lot of foreign subsidiaries across Africa and even in the United Kingdom. And I can remember that sometimes maybe early last month or in March, they announced opening another branch in Manchester, which also further confirmed their uh, interest to further expand beyond Nigeria. And but the fact that they pay dividend one way or the other will simply means that maybe they actually passed that test. Or maybe the central bank actually missed that out.
Because that
Well,
I was
I
kind of
will.
I was going to ask you, what is that a metric that the central bank have been using all along to check which company should pay dividend or which company should not pay dividend? Or did this just emerge from, somewhere from the moon and like, oh, hey, Access Bank is in breach of BOFIA Act, and then they stop them from paying dividend. As you mentioned, did they miss it for other ones, or it's just Access Bank that is in breach?
Well, I would say that I will leave it to the central bank to actually
Yeah,
do that
obviously.
because Access Bank was prevented from paying interim dividends. Let's be realistic.
Hmm.
And but GT paid, but GT also falls short of the same thing that Access Bank actually fell short.
What do you mean?
And um, the requirement was that certain percentage of the bank has to be a percentage of the whole co structure. And
Okay.
Access Bank fell short of that, and that's one of the reasons why they did private placement towards the end of the year. And GT, after payment of interim dividend, found out that they also fell short of that as well, and they went back to regularize the same thing that Access Bank regularized. So, and that's why I said that could it be that the Apex Bank actually missed that, and that's why I'm saying that maybe they also missed that on the other banks this time around. And even when you now look at names like UBA, and UBA did not pay interim dividend, sorry, the full year dividend, and they mentioned that one of the reasons why they couldn't pay was because there are some reserve that they need to show up and the likes and that. And that's what the management actually mentioned. And beyond Access Bank, UBA, I think I would say UBA ranked number two, or even if not ahead of Access Bank in terms of having footprints beyond Nigeria. While you were speaking earlier, you mentioned about 40% of their revenue actually came
Hmm.
from their subsidiary outside the country. So it gives you an idea of the level of access that's actually sitting outside the Nigerian space. Could it be that UB also fell short of that same thing? Well, we don't know, and
Yeah.
we'll
So
leave
we'll leave
to
that to the
management
Apex
to
Bank.
actually look at,
Apex Bank to.
um,
But I mean,
and if
sorry, I
if
wanted.
you
Yeah,
were
go
saying something.
finish your thoughts, please.
So I'm saying that most of these other banks now they have opportunity to quickly regularize this before their next dividend payment session.
Okay, I mean, we are not suggesting that the Apex Bank has any special interest in Access Bank. Well, we just worried like, is there a possibility that they missed to check that for
No, no,
other
no, no.
banks?
It's not that they have any special. I think that and that's one of the reasons why I said that could that be a sleep.
Yeah,
And
I understand.
I also think that most of this bank as well, um, by now they're already looking at their books. Everybody's trying to look at the book, and for me, I don't think it's something that is premeditated by the Apex Bank. I just feel that they were trying to just check the book to see that, oh, do you think this? Do you think this? And they just saw that line, which says that you must be this, and they now start checking that, okay, what is your investment in foreign banking subsidiaries? And they found that they actually contravened that law. And as Apex Bank, of course, regulator, you expect everybody to be in line with the regulation. And for them, they are just praying by the rule, just praying by the law. We don't
Yeah.
have any other thing against you. This is what the law says. Are you in contravention of the law? And if it is, then walk around adjusting yourself to be in line with that. And in the mind of the Apex Bank, it could be as if it could even be that they are looking to actually adjust that line of requirements. However, you need to actually comply first before the adjustments of the rule.
Okay. I think I mean, I for one would advocate that that section be revised, be revisited, even more so now that we've seen that banks have now recapitalized with about 500 billion. So I think it only makes sense for the Apex Bank to adjust that section of the BOFIA Act. Briefly, let's talk about the fixed income market now. We noticed the central bank's latest treasury auction. We saw that massive demand, especially on the 364-day paper. So the stop rates easing slightly. So how attractive is the fixed income market right now compared to equities? And what does this, tell us about investor confidence in the naira, especially for foreign investors who are still participating in that market?
Well, for the fixed income market, currently, the market, we noticed a bit of life in the market last week. And I think that was on the back of the result of the NTB auction, where the rates actually printed below the 16.199 that we have seen in two last consecutive auction. The rate printed at 16.15, and that's about 4.5 basis points below where he actually printed at the last auction. And what it means to the market was that the DMO is not in any desperation to borrow at any elevated rate. And we saw the impact of that also filter into bond side of the market,
Yes.
where we noticed interest on the some names in the belly on the belly of the curve. Names like 2035 maturity, the 2033 maturity got attention last week. We saw rates actually moderated from around 16.85 levels to around 16.77 levels as well. And that actually also affected the long end of the market as well, because we saw interest on the 2053 maturity around 16.7, 16.8 levels. So it seems that there's actually better life into the market now. And like I mentioned, that's more like on the back of the poster of the debt management office at the last auction. We feel that market is well liquid. Market actually opened with about over 4 trillion this week. We saw maturity, we saw other inflow raising the market, and the market climax at close to about 7 trillion during the week. Of course, the central bank was in the market twice, issuing automobiles to actually reduce the level of liquidity in the market. But that is not enough to actually
Take out
discourage
liquidity.
activity at
Okay.
the NTB segment of the market and also the bond segment of the market. So if you go into the new week, we may likely continue to see investors, portfolio manager, foreign guys come to the market, just cherry picking instruments across the market. And don't forget that later part of this week, we are expecting, later part of this month, we are expecting the monetary policy guys to meet. Oil
Yes.
price moderated at the beginning of the week before another aggressive statement hit the market, and we saw a reaction, action, and counter reaction on the part of the United States and Iran, and that actually for that now push oil back upside. But when we saw oil actually moderated below $100, we also felt the positive impact on the market here on the fixed income side as well. So I think that the current limiting factor is still the crisis in the Middle East, and I just feel that it's just both parties coming to the table, agreeing to what will work, and bringing normalcy back to the global economy. And immediately that is done, the fear of that aggressive inflationary pressure will actually doused. And when immediately that's actually reduced, we'll see that impacts the fixed income side of the market.
Okay. That's a nice one there because we will notice the market has been really quiet, as you mentioned, for about a couple of weeks now, even if not more than a month. And obviously it has significant correlation with what's happening outside of the Nigerian financial market. But people, let's begin to coast home now. And so we've seen 4 solid months of incredible gains. We've now seen that slight pullback this week, and we're also witnessing what's going on with the Access Bank and the Apex Bank. If you may, can you paint the picture for the rest of the month? Now, I know it's a big one. Can you paint like the picture for the rest of the month and even Q2? Are we still in a bull market phase, or are we going to witness a correction?
Well, for me, I don't think there's any correction in sight. The market still has capacity. Investors are looking at where to actually push front. There's a lot of undervalued instruments in the market. There's a lot of names in the market that still have upside potential. We have names like Airtel, we have names like NTN, we have names like Access Bank, we have names like First Bank, we have names like ETI, and also the names like that is known to the market like GT Bank, Zenith Bank as well. They still have upside potential. So markets still have headroom, and so I think there's still a lot to gain for the market this quarter. I won't be surprised if by the end of the quarter, Access Bank is back close to around maybe 27, 28, or close to 30 levels, because currently their price to book is around 0.2. It tells you that the name is actually heavily cheap. So investors that are not expecting any dividend for half year will actually lock in now, so as to take advantage of the cheapness of the name in the market. So I think for me, there's still a lot of opportunity in the market. I don't see that aggressive correction yet. Also, bearing in mind that by Q3, we are expecting the enlistment on the FTSE index. And
Index.
what that will also mean that we'll see fresh capital come to the market. And already we are already seeing people front running that information. However, there are still some investors that will actually wait to actually get enlisted before coming to the market to actually invest. So I still see that there's still a lot of opportunity in the market.
Okay, for the average retail investor watching this now, maybe someone that jumped into the markets during the April rally, what's your practical advice right now, and any sectors or strategies you're personally watching closely?
For me, I'm watching many sectors. I'm watching the banking sector. Actually monitoring names like Access Bank, ETI, FirstHoldCo, GT Bank, Zenith Bank, Weber. I'm monitoring names like that. I'm looking at the cement names. I'm watching names like Dangote Cement. I'm watching WAPCO. I'm watching what BOA is doing in that segment of the market. You are looking at the brewery names. I'm looking at Nigerian breweries. I'm looking at Guinness. I'm looking at international breweries. If you have noticed, Nigerian breweries is one of that silent names in the market that has been moving steadily. It went as low as 17 naira sometimes in the month of April. And he has been able to crawl back to around 83 naira now. And that is close to about 15%, close to about 20% return, if I'm not wrong. Yeah, between then and now. And so we still see upside potential for names like that. And also the consumer names as well. You saw what UACN actually posted, that monster return that
Yeah.
UACN posted as well. It
Mhm.
tells you that what some of these names are doing, the consumer names. And so I think that there's still a lot of opportunity in the market. So by some of this sector now, then you can now pick the name and actually so resonates with you. You can look at the banking sector. What names do you think resonates with you? We have quite a number of cheap names there that you can actually pick the ones that actually. You look at the cement name. I just mentioned three names in that segment. You have Waco, you have Dan Cement. So, which one actually do you want to pick? For me, Waco is cheap. For me, Dan Cement is also cheap. So, which one do you think will be better for you in your considering your portfolio? And host of others like that. Most especially the cement name, man. The government is still on aggressive infrastructural development, and we're seeing them that what they're currently doing more mostly is more of a concrete road. And when you're doing concrete road, the main beneficiary of such policies, they are the cement names.
Cement
And
sectors.
just last week, the government awarded reconstruction of Pata Bridge. So it gives you an idea of what that will mean to that segment as well. So there are a lot of infrastructural development going on in the market. So the cement sector will continue to benefit. And also, if you want to also benefit from what government is doing, then invest in some of these things so that you can also be beneficiary of some of those policies.
Interesting. Any don't sleep on this opportunity that you think, I mean, that you are seeing that you think most people are might not be seeing. And again, any final message for listeners who may be nervous after the dip that we witnessed in the market? Any message?
Well, for those sleep for needs opportunities, there are amples of them in the market. I spoke about Access Bank earlier on. Access Bank is a good name, and for investor that has capacity to hold for like a 12-month horizon, you can take a bet on names like that. You have other names that we mentioned about FirstHoldCo here today. We saw that their price to book is currently 0.79. When you compare to names like Zenith and GT Bank, where they are already north of one. And we mentioned what is happening in the cement sector. So there are a lot of those sleeping on this opportunity are currently in the market that you can actually take advantage of, considering that you have patient capital to actually invest. And my final wrap up for people that actually you are having position, maybe your position tanked last week, and I want you to understand that it's not it was not broad market based. There are still a lot of names that actually enjoyed last week, even when people were taking profits in other names. And so I want you to look at your name critically. What do you think led to that profit take? Have you been speculating on that name? Are you sure the name has fundamental? And why do you think people are taking a profit on that name? And like I mentioned, you see names like Aradel. Aradel still has strong fundamental, although people took profits on Aradel. But like I mentioned, where was Aradel at the beginning of the year? I simply meant that people have enjoyed over 200% return. And that could be the reason why a lot of them are trying to actually shed their shed weight on that name. So if you look at it from those eyes, of course, you'll be able to see clearly whether you're actually sitting on a name that actually has strong fundamental. And if that is it, then stay in that
That
name.
name. Okay.
Believe it and stay in that name. But if
Right.
not, now may be a very good opportunity for you to get out if you feel that the name does not have a strong fundamental.
Yeah. Thank you so much, Dipo, for your interesting and insightful analysis as always. It's been a wonderful time having to, do this again and chat with you. Dipo Ajayi is head fixed income and vice president at Chapel Hill. Thank you, Dipo, for coming in today.
Thank you very much, Dr. Okafor, for having me again once again today.
All right, and thank you everyone for watching. Again, we are here every weekend helping you to make sense of what is happening in the financial market. We provide investor guide, investor tips, so you can lock in here for professional advice for your investments across different sectors, across different asset class, across different securities. All you need to do is to like this video, subscribe, and hit the notification bell so that you can always be notified when new episodes are uploaded. Thank you so much for watching, and we are out. Bye.